This is just another added time and added thing to do. I want Profit First to be easier for you, not add more time to what you're doing. Hey guys, Abby Johnson here with Matterhorn Business Development. Welcome to today's video. I have been a Profit First professional for about 5 years now. I've worked with over 40 industries with the Profit First system. So I have seen it all. And I have some people who come to me and they don't know about Profit First, and I help them implement it. And I have people who already know Profit First, but they just need help with the specifics of their business. So I've seen people who have tried to implement on their own and end up making common mistakes. So today I want to talk about the 5 common mistakes I see when people try to implement the Profit First system. Now, if you aren't familiar with Profit First, or if you are and you're not really sure where to start with implementing it, I wanted to let you know that we have a free Profit First training. It goes over the system as well as a downloadable worksheet, and I show you how to do a proper assessment on yourself, because I've found a lot of people who do it through the book, even though there are directions in the book, they usually end up making some common mistakes there as well. So in this training, I walk you through how to do that assessment properly, plus give you this spreadsheet, which is very helpful. To access that training, all you have to do is join our free community growth hub for entrepreneurs. You can click below to join today, and then you will have access to that training and that worksheet. Okay, let's dive in. So mistake number 1 that I see is having expenses coming out of all of your Profit First accounts. The main purpose of each account is to be a holding account with all expenses still coming out of the operating expense account. So for example, you have the owner's pay account. Let's say you want to take a distribution from the owner's pay account. You should be transferring that money to OpEx and then transferring it to yourself, or however it is that you pay yourself that distribution. Same with your pay. It should be transferred from owner's pay into the OpEx account, and then payroll gets taken out of there. I've had some people who are like, my payroll company won't let me withdraw from 2 different accounts, which I understand why. That's complicated on their end, but you don't need to be doing that anyways. So if your weekly salary is $1,000 or whatever, then you need to transfer the $1,000 from owner's compensation to OpEx. Same goes with anything else. When you're doing a profit distribution, if you're paying your quarterly taxes out of the tax account, then you need to transfer that to the operating expense account first and pay it from the operating expense account. This makes things a lot easier for your bookkeeper. This way there's just transfers going in and out of those other accounts. Income just has deposits in and transfers out, and the other accounts just have transfers in and out of them. This really reduces confusion and makes it really easy to find transactions or expenses or deductions that you're looking for. You know it's coming out of the OpEx account, so that's where you need to look. It sounds more complicated because you're doing more transfers, but it's actually less complicated. Just trust me on that. Okay, mistake number 2 I see is not wanting to actually open the physical bank accounts and trying to get around that by using a spreadsheet or some weird workaround in QuickBooks for envelopes or something like that. I had a client when I was first starting out as a Profit First professional. I was working with a couple people for free just to get my feet wet and learn the system and get practice. And one of them was a friend of mine who was running a business, and for a long, complicated reason that I won't get into, he was not able to open the physical bank accounts. This is very rare. You are probably not in the situation he was in, but that was the situation. I still really wanted to help him and get the practice for myself. So I started using spreadsheets to track the different categories, but it was basically another bookkeeping exercise. He already had a bookkeeper doing bookkeeping, and then I was going in and having to take every bank transaction and categorize them on these different tabs to say, hey, this much is profit, this much is expenses, and all of that. And it was so time consuming that it's really not worth it for anyone else. I gained experience and I was still able to help him. But as a business owner, this is just going to waste your time trying to get this workaround so you don't pay a $10 fee or something. Like, I don't really get it. So just open the bank accounts. And that actually brings me to the sponsor of today's video, who is going to help you open open your bank accounts, no problem. You may or may not heard of Relay. They are the only profit first certified banking platform. This is amazing. This is huge. When they first became certified, I was so excited. So with Relay, you can have up to 20 bank accounts with no fees. 2 of those accounts can be savings accounts, which start out at a 1% return. Most banks are like a, 0.01%. So even starting at 1%, you're earning a little bit something more on your profit and tax accounts if you make those savings accounts in Relay. Like I said, these are no fee accounts. You can have up to 20 accounts, which is just amazing if you want to add more accounts to your profit first system. One of the things I love is just their interface and the ease of use of Relay. A lot of banks and smaller banks that may give you better rates for multiple accounts actually have these really outdated online systems that can make it harder to use. So Relay is definitely in 2024, 2025, they are here and they've got you covered with an easy interface to navigate and see all of your accounts. An amazing profit first specific feature they have is you can actually set up auto transfers. So you can say on these dates of the month, the 10th and the 25th, or every Friday, whatever you set it to, do the transfers for me at this percentage, and you can set the percentage that goes into each account. That's really great to just automatically make your transfers happen without you having to take the time to do them. I personally still love doing them manually because I'm a nerd, but I also think it's really cool to see the data every week of how much is going into each account. Relay also has virtual cards, so you can set up cards for your employees to use if needed, and you can control their spending limits, which bank account that card is attached to. This is really great for fraud prevention too, because that way if one card is compromised, it's only that one card and not your entire bank account that's compromised. So Relay really has it all. They are so supportive of small business, and they're really trying to help and add features all the time to help small businesses. I highly suggest you check out Relay, click the link below, and open your accounts today. Stop putting it off, stop avoiding it. It's gonna make your life so much easier. So just go join Relay today. Okay, the third mistake that I commonly see is not following an allocation rhythm. So in the book, obviously, Mike Michalowicz recommends the 10th and the 25th of each month as an allocation rhythm. This makes sure your bills mid-month and beginning of month are covered. I personally do every week. Most of my clients do every week. But what I have seen with some clients is they start transferring with every single deposit. And sometimes that's because things are tight and they need money in the accounts, which is something else I work with them on separately. But when you're doing this, it's a lot of transfers. It makes more work for your bookkeeper. It's more confusing when you have 50 transfers in a month rather than just every week it's really 4 transfers coming out of the one account into the other 4 accounts. It's also better time management if you, the owner, are doing the transfers, is because you just designate a time of the week that is your finance time, and everyone else can leave you alone and you're in there processing payroll, paying bills, doing your transfers. Just do it all at one time instead of having to run around during the week handling all of these finance, what would be a CFO job type of things. Plus, seeing this rhythm in your allocations, you really learn your business. Wow, at the beginning of the month, transfers are really great because we have a big influx of cash. And then at the end of the month, it's always really tight. Okay, so what can I do to even out our cash flow or bring in more business in the second half of the month? And you start to know your business more and be able to anticipate that in your spending and in your planning of your business. The fourth mistake I see is misusing the owner's pay and tax accounts. There's definitely some confusion there. The tax account is to cover the taxes of the business. Now, the small businesses I work with, this is usually their personal income tax. It's usually tied to the business. Even if you're an S Corp, you still have your personal taxes that are coming out of your W-2 pay. And that is what the tax account is, whether you're paying quarterlies, whether taxes are coming out of your paycheck, whatever is your IRS bill or state tax bill at the end of the year, whatever you're paying towards that should be coming out of the tax account. This is not a sales tax account. I usually suggest having a separate sales tax account, which is very helpful to have. This is income tax. And really what you should be doing, I'm going to give you an example here. If you're giving yourself distributions, then okay, you just distribute from the owner's pay account. If you are on W-2 pay because you're an S Corp, so your pay is getting run through payroll, then most people, the mistake I see is they're just taking their gross pay from owner's compensation and transferring it to OPEX for payroll. So let's say for simplicity's sake, your pay is $1,000 a week and someone's just transferring that $1,000 a week into OPEX from owner's compensation. What you should be doing is, let's say your paycheck gets $200 taken out for taxes, for FICA and all that stuff. So you should be transferring $800 from the owner's pay account and $200 from the tax account, which 800 plus 200 equals 1,000. And then that money is transferred into operating expense, payroll is run, and the money is taken out there. I know this is more transfers. Oh my gosh. You guys, let me just tell you though, the end picture you get is so helpful. You can see what you actually have in these accounts for owner's comp, for tax. Are you overfunding these accounts? Are you underfunding these accounts? It really paints a different picture when you do transfers this way. And I really like getting on an allocation rhythm in general that matches up with payroll. It can be weekly, or a lot of people are on bi-weekly pay. You can do your transfers bi-weekly, but either way, you just sit down and make these transfers all at once. So it's not, again, running around trying to put out fires in the business and like, oh wait, I need to go transfer money for payroll. Like, no, just do it all at one time. It's really not that complicated. The final and fifth mistake I see is not having an income account. What I've seen is some people have trouble redirecting their deposits to a new account. So maybe if you're getting paid from like an insurance company, if you're in the medical field, it can sometimes be tricky to get them to redirect their deposits. I don't know why. It really shouldn't be. So for those people, they usually are just kind of like, I don't want to deal with it. And they keep the income going into the same account as the operating expenses. Now, obviously that kind of goes against the profit first system in a few ways, because we want operating expenses to just show what you can pay for in operating expenses. What can you spend? And when you have deposits going in there throughout the week or throughout your allocation period, it makes you look like you have more money than you have. So it doesn't give you that accurate picture until you've made your transfers of what is in your bank. This is just another added time and added thing to do. I want profit first to be easier for you, not add more time to what you're doing. So if you can, just go through the steps of getting a separate income account and getting all of your deposits redirected there from your credit card machine, from outside vendors, however you're getting paid, wires, ACHs. Just take the time, and it's going to be easier in the end if you just follow the system. That's kind of the theme here today, is just do what Mike says and it works. All right, so if you have any more profit first questions, leave them down below. I hope this was a helpful video for you. I would love to see you in our free community growth hub for entrepreneurs. Not only do we have that free profit first training in there, but we hold monthly trainings every month, and you're in a community of like-minded people that you can interact with, ask questions of, and it really is a great community that we're growing, and I hope to see you there. Click the link below to join. I'll see you next time.